Alright, today I want to record a little video for you, and hopefully it's going to be a little tip if you're having this sort of a problem. And what it's about, it's about your stop losses being hit within a couple of minutes of the opening price in the mornings. Now, I was thinking about this a couple of days ago. A friend of mine, he brought it up. He's just got into trading actually, and I remembered back when this was happening to me, I was having this problem. So what was actually happening was, if I was running some sort of a strategy and I was using quite tight stop losses that were quite close to the current market price, then what I'd find is quite often when the market's opened in the morning, this was when I was trading stocks on the London Stock Exchange, so 8 o'clock in the morning, within a couple of minutes of the open, then what might happen is the stop loss would be hit, it would take me out of the trade, and then prices, if I'd bought, the prices would then revert and carry on going back up, and it quite possibly would have been a profitable trade. So why was this happening? Well, with any instrument, you've got a bid and an ask price, or a buy and a sell price, and the difference between the buy and the sell price is what's called the spread. On a smaller company, companies on the FTSE 250 and even smaller, less liquid companies, this spread, it can be wider. So whereas maybe normal trading hours, you could be looking at a 1%, maybe a 2% spread. That's 1% of the price of the particular stock. Very, very early on in the mornings, within a couple of minutes, after 8 o'clock, between 8 and a couple of minutes after, that spread, whereas it's normally about that during the day, it can go like that and go really wide. So what happens is, if you've got a tight stop loss, then that can quite quickly get hit within the first couple of minutes and then go back to a normal level of spread, and for the rest of the day it wouldn't be hit. So this is quite frustrating when it used to happen to me. It happened quite a few times. Now, rather than blaming my broker or blaming the stock price or blaming the bloke next door, I looked at it and I thought, I've got to find a way around this. But the problem was, I was looking at the price charts. I'd go down and look at like a minute price chart, and I couldn't see. The price was trading up here, and my stop loss was here, but the prices never even went near my stop loss, and yet I was still getting stopped out. Now, the reason for this is because when you look at a price chart, you might only see the ask price or the buy price on the chart. So you won't see the spread, you won't see that big difference. On some charts you can change, you can look at the buy price or the mid price or even the sell price. So when I looked at that, I looked at charts with the sell price or the bid price, and quite quickly I could see, yes, prices did trade down to that level, down to that stop loss level, and then, like I say, the spread would narrow and it would stay narrow for the rest of the day. So how did I get around it? Well, what I'd done was, when the markets closed the previous day, what I'd do is I'd take my stop loss, and let's say, for example, a stock was trading at 100 pence, and it had a spread of 99 pence and 101 pence. Quite a normal sort of 2% spread. So what I would do is, if I had quite a tight stop on that particular stock, let's say at 97 pence, so what I'd do after the market shut, I would adjust that stop loss and I'd make it very wide. So I might take that stop from 97 down to about 90 pence, So then the next morning, within that first couple of minutes, when the spreads really widened, they didn't widen enough to take out that stop loss, and I was still in the market. But what you then need to do is you then need to readjust your stop loss, bring it back to your desired level, or back to that 97 pence. Now, I used to do this probably 15-20 minutes after the market's opened, so quarter past, maybe 20 past 8, and it worked. It was a workaround, and it was successful. The only downer was that I did have to be around at quarter past, 20 past 8 every morning to adjust my stop losses. It wasn't really a problem, but actually back in those days, I didn't even have an iPhone that I could adjust my orders on. It was either over the phone or on the laptop, so I had to make sure I was near a computer. So that's a little workaround. If you're having the same sort of problems, you're noticing when you're trading these smaller companies that you're getting stopped out for what seems like no reason within the very first few minutes of the market opening. Of course, it doesn't tend to happen on bigger stocks. On more liquid, big companies, the spreads tend to be tighter and stay tighter. Forex, the spreads are very, very tight, so you wouldn't see that. The Forex tend to be 24-hour markets anyhow. So I don't really have that problem these days. I don't tend to use strategies which allow me to get taken out of trades with hard stops. I use exits. I look for different exits, whether a trend is coming to an end, and then I decide, and I'll place a limit order to get out of the market rather than using a hard stop. So if you're having these problems, hopefully that's a little trick that will help you out there. And so don't forget to subscribe to my channel. And if you're watching this anywhere but my blog at thetransparenttrader.com, head over there now, and I'll see you on the next one.